Okay, so good afternoon, everyone. And today we'll be looking at market analysis. So we'll be picking a particular topic under market analysis, and we'll be doing the rest over the time. So when it comes to market analysis, what exactly is market analysis? Now, market analysis can be defined as a way in which we analyze the market. Sorry for that. So basically, we'll be looking at market analysis. Now, we'll start by what is market analysis? What is market analysis? Now, when we talk about market analysis can be defined as any methodology. Now, what I mean by any methodology is this. As you go on in this industry, you will realize that we have millions of methodology out there. So when we talk about market analysis, it is any methodology. And what do you use the methodology for? You use it to forecast the direction of price movement. So basically, when we talk about market analysis, it is any methodology that is used to forecast the direction of price movement. Now, what this means is this. As a trader, when you want to enter the trade, let's assume you enter the trade and I was opportune to ask you, why did you enter this trade for a buy? You should be able to tell me that, oh, my methodology asks me to. Now, the moment you tell me, oh, I don't have a reason, I just felt I want to enter a buy, then it means you are gambling. So when it comes to market analysis is any methodology in which you're using to forecast the direction of price movement. So for you to buy, it means that your methodology is giving you reasons why you should buy. So also, for you to sell, it means that your methodology is giving you reasons to sell. Now, how do you use this methodology? Now, in order to do this, you try to study past market data. For you to do this, you are going to be studying past market data. Now, why are you doing this? The reason being that in the financial market, we believe that whatever has happened before has the tendency of happening again. And that's why we try as much as possible to study what has really happened before. So it is based on what has happened before that we use to project or look at what are the possibilities of what might happen again. If we are together, just wave your hands. If we are together, please wave your hands. Okay, good. So I want to believe you now understand when we talk about market analysis. Now, let's look at the various types of market analysis. When it comes to market analysis, we have three major types of market analysis. Now, the first one is what we call the sentimental analysis. Sentimental analysis. That's the first one, sentimental analysis. The second one is the fundamental analysis. Fundamental analysis. And the third one is the technical analysis. So what it means is anyone can decide to use any of this methodology. You can decide to use any one of it, and also you can decide to combine the three methodologies. So basically, when it comes to analyzing the market, we have the sentimental, we have the fundamental, and we have the technical. So today, we'll be looking at two of these market analysis, sentimental and fundamental. While tomorrow, beginning from tomorrow till next week, Wednesday, we'll be looking at technical analysis. So between today alone, we'll be looking at the sentimental analysis and the fundamental analysis. Now, what exactly is the sentimental analysis? Let's start with that. Now, what is the sentimental analysis? So when we talk about the sentimental analysis, Sentimental analysis. Now, sentimental analysis is basically a way in which we try to gauge how other traders feel about a particular currency or instrument in the market. So when we talk about the sentimental analysis helps us to gauge how other traders feels about a particular instrument or currency. Currencies. Now, what does this mean? Sentimental analysis helps us to look at the aggregate overview of all the traders on a particular currency pair. So it means that now, how do you use this? How do you use it? There are websites. We have websites in which helps us to look at, okay, on GBP USD, what are most of the traders doing? So if you look at the website, you'll be able to look at it, okay, for GBP USD, I can see that, 70% are on a buy direction, while 30% are on a sell direction. So with this, you've been able to gauge how other traders feel about GBP USD. Now, you can now decide to do whatever you choose to do based on this information. Please, if you understand this, please just wave your hand. If you understand this, please wave your hand. Good, good. So basically, when we talk about sentimental analysis, it's just a way in which we can gauge other traders' opinion or feeling about a particular instrument. Now, let's look at some of the websites that helps us to see all these things. Let's look at some of the websites. Now, basically, I'm going to be dropping 3 different websites. I'm going to be dropping 3 different websites that can help us to gauge how other traders feel about a particular instrument. So these are the 3 different websites. We can see the first one is forexclientsentiment.com. We have the forexclientsentiment.com. We have the dailyfx.com/sentimental report, and we have the myfxbook.com/community/outlook. Now, all these websites are different websites in which you can see in an overview, in an aggregate, what other traders feel about a particular instrument. Now, when you're able to do this, what you now choose to do with that information is dependent on you. Now, we have some traders that when they are able to do this, they will now use this information to go to the technical analysis to analyze the market technically. They've been able to see what other traders are doing. So they already have this at the back of their mind. And with this, they will now go and analyze the market technically. And that's why I advise traders that when it comes to the ways of analyzing the market, it's better you combine different ways of analyzing. When I mean different, you can combine either sentimental with technical, you can combine fundamental with technical, like that. So it helps you to have more confidence in your analysis. If we are together, please let's type in a yes on the chat box. If we are together, please let's type in a yes on the chat box. Okay, good. So let's go to the next one, which is the fundamental analysis. The fundamental analysis. So remember, you can drop your question in the Q&A section. You can drop your question in the Q&A section. We'll attend to it before the end of today's class. Now, let's talk about the fundamental analysis. Now, what exactly is the fundamental analysis? What does it mean? Now, when we talk about the fundamental analysis, it's a way of judging or analyzing the markets by looking at the economy, the social, and the geopolitical forces that may affect the supply and demand of an asset. Now, what do I mean by this? Let me type this down. Fundamental analysis is a way of judging or analyzing the way of judging or analyzing the market by looking at the economy, social, and geopolitical social and geopolitical forces. Geopolitical forces that affect supply and demand. So that's the definition when we talk about fundamental analysis. It's a way of judging or analyzing the market by looking at the economy, social, and the geopolitical forces that affect supply and demand. Now, what do I mean by this? Now, if you look at your chart, let's assume we decide to look at our chart. If you look at your chart, basically, what you are seeing is candlestick. What most people will see, or what most people claim to be seeing, is candlesticks. But remember that there is a forces that moves the candlestick, and the force is supply and demand. Now, what do I mean? When you look at the candlestick and you are able to see that price is neither going up, price is neither going down, you will say that price is at equilibrium in which supply equals demand. But the moment you look at candlestick and you begin to see that, oh, prices are going up, or you look at candlesticks and you see price is going down, what it's basically telling you is that you are looking at the imbalance between supply and demand. Because if supply and demand is balanced, then price will just be a straight line, which will be an equilibrium. So the moment you are able to see that price is going up or price is going down, then it means that there is an imbalance between supply and demand. Now, this imbalance, apart from traders just deciding to buy or sell, there are other forces that causes that imbalance. There are other forces. Now, and that is what you use the fundamental analysis to do. So you use the fundamental analysis to identify those forces. Now, the forces could be economic forces, it could be social forces, and it could be geopolitical forces. Now, what do I mean by economic forces? What do I mean by social forces? And what do I mean by geopolitical forces? Now, let's start with the economic forces. Now, I want to ask us a question. Let's use Nigeria as an example. Let's assume in Nigeria, we realize that the economy is not stable. When I mean the economy, there's no security in the economy. Let's say, okay, well, it's obvious that there's not even security in the economy, and that's why today we hear they kidnap someone, we hear Boko Haram somewhere, we hear this somewhere. Now, it's obvious that there is no security in the economy. Now, the truth is this. Let's imagine, let me assume that Mr. Happiness, let me assume that Mr. Happiness is not a Nigerian, and he decides he's a businessman but not in Nigeria, and he's looking for a country where he can invest his money into as a businessman. Now, let's assume he has been thinking of coming to Nigeria. But the moment Mr. Happiness realizes that there is no security in Nigeria, will he be interested in coming to invest in Nigeria? Please, who can answer that question? Thank you, Mr. Akin. No, he will not. Exactly. So it means that this insecurity alone is causing what? An imbalance. It's causing an imbalance. And remember, let me now ask a question. When investors are not willing to come and invest in a particular economy, is it good for the economy or bad for the economy? Who can answer that question? When investors are not willing to come and invest in an economy, is it good for the economy or bad? Good, it is bad. Thank you, Mr. Kelvin. Thank you, Mr. K. It is bad. These are forces. So what it means is this. Now, most people, you don't understand what really moves the market. You think that you look at the chart and you see charts moving. No, the chart that is moving goes beyond charts just moving. There are forces. Now, let's take another example. Let's use the period of the coronavirus, for example. Now, during the period of the coronavirus, it was obvious that there was chaos in the economy. When I mean chaos, I mean that even people are willing to work, but they cannot even go out to work because of what is happening. Because of the coronavirus. So as a result, what happened? Most companies shut down. Now, who can tell me what is the impact of companies shutting down? What is the impact to the country's economy? Now, who can tell me when companies and when different companies are unable to function? When production, let's look at manufacturing sector, they cannot go to the office to manufacture. The educational sector, they cannot go to their day-to-day to educate. Is this good for the economy or bad for the economy? It affects the economy. Thank you, Mr. K. Exactly. Now, when it affects the economy, remember it's affecting the economy negatively. It will be affecting the economy negatively, which as a result, it will make the price of that country's currency to drop. It will make it to drop. So what does this mean? I can remember during the coronavirus, US dollar was just crashing. It was falling. Just because the economy was down, US dollar was down. The economy, it was just falling. Thank you. Thank you, Mr. Mata. Abimukta, thank you for that. So basically, what the fundamental analysis does is this. It looks beyond people just looking at the chart and thinking it's just moving. You just think the chart is just buying. It decides to buy or it decides to sell. No, there are forces that affect it. And these forces are the economic forces, the social forces, the geopolitical forces. Now, I can remember, let's look at the geopolitical forces. I can remember in US during the election period when Trump won the election during Trump's regime. Now, during the election, I could remember it affected the US dollar. Why? Because people were not sure who is going to win the election. So as a result, the dollar was not even stable at all. Now, everybody were just watching out, waiting for the dollar, waiting for the release of who won the election. It was when the result was released, that was when US dollar was stable. Why? Because of just the political forces. So what this means is, as a trader, it goes beyond you sitting down in front of your computer and looking at chart. It goes beyond it. There are other forces that affect the chart that you also, as a trader, must also study. Now, are we together? Are we together? If we are together, please let's wave our hands. If we are together, please let's wave our hands. Perfect, perfect. Thank you. Now, how do you also take advantage of this information as a trader? How do you take advantage of the fundamental analysis? How do you use it to your advantage? Now, let me teach you. Now, in using this, there are some websites that helps you to get information, that is to get economic information about different countries. That is what is happening in the manufacturing sector of this country, what is happening in the employment sector of this country, what is happening in the GDP of this country. You need all this information. So there are some websites that you can visit to get information on a daily basis. And I could remember it got to a level in this business of mine that I told myself, until I'm able to look at the news and know what is really happening, I am not going to trade for that day. And that is how important it goes. So before you enter to trade the market, it is expected that you must look at the news for you to have a profitable trade. Now, let me drop some of the websites. Now, these are some of the websites that helps you to look at news. So you can put this down. fundamental news. So when we say fundamental news, that is economic news, social news, and geopolitical news. All these are news events. Now, these are websites that you can visit on a daily basis. It is not you must visit on a daily basis so as to know what is happening. Now, for the purpose of today's training, we'll be looking at this first one, and we'll be looking in detail how to take advantage of this news to make money. So we'll be looking at the first one, which is the forexfactory.com. The forexfactory.com. Now let's look at the forexfactory.com. So I'll be sharing my slide on this. Okay. Okay, if you can see my slide, please wave your hands. If you can see my slide, please wave your hands. Okay, good, good. Now, you can see I'm on the website. So just go to your website and click on forexfactory.com. Just click on it, and it brings you here. So this is how it looks like. Now, when you come there, what are the things you need to first do? Let's look at it. What are the things you need to first do? The first thing you need to do is come to your time here. Look at the time here. Come to the time here. Come in. You can see, just click on this time here. Now, when you look at it, compare it with the time on your laptop, on your phone. You can see the time on my phone and see the time here. It must tally. It must tally. Now, if it doesn't tally, then all you need to do is what? Click on the time. Click on the time here. When you click on the time, then what will you do? You make sure you change it to West Central Africa. West Central Africa. That's the next thing. If you know it's not tallying, just change it to West Central Africa. Now, when you do this, then click on Save Settings. Click on Save Settings. So when you do this, you will notice that the time is now the same. So to go back to the news, just come to the home page, which is this point. Click on the home page here. Good. Now, that is the first thing you need to do. That is the first thing you need to do. Now, after this, what next? How do you take advantage of the news to trade the financial market? How do you take advantage of the news? Now, let's look at those things you need to look at. Let's watch it and see how it works. Now, the first thing is come to this point. You can see that this is the date. And this is the same date, which is today's date, Wednesday, 20th October. Wednesday, 20th October. So come to the date. Now, after the date, the next thing is the time. The time. Now, based on the settings you have done, you will realize you'll be able to know the time a particular news is going to happen. So that is the essence. Why I said you must update the time on the news. Because if you don't update the time on this website, it will be giving you another country's time and you'll be getting a wrong information. So you must be sure that the information you're getting tallies with your local time. So that's why I said you should come to change the settings. So you make sure. Now this news, let's look at it if we still have any news for today. Okay, so we can see that there was a news release 3:30 today. There was a news release, and the next news is for 5 p.m. today. Okay, good. So let's look at it. Let's look at how this news will help us. How will it help us? Now, we can see this is the time of the news. So when you see the time, all you need to do is wait for the time of the news to happen and look at what really happened in the news. Now, the next thing is, what currency does the news affect? What currency does the news affect? Because when there's news, you need to know the currency. You can see it. So for this particular news, which happened 12:30 in the midnight, it was for Australian dollar, AUD, Australian dollar. So it affected the Australian. Then this news, which was for 12:50 in the midnight, was for Japanese yen, Japanese yen. So it's going to affect, it's for Japan, so which means it affected Japanese yen. Now, the next one is for 7 a.m., which affected the euro. We have the one again for 7 a.m. that affected the GBP. So this is it. So when you're trying to look at the news, you need to look at what country's currency is it affecting, because that is how you take advantage of it. Now, after doing this, the next thing you need to look at is the impact of the news. The impact of the news. Now, why you need this is this. It is not all the news that have impact on a particular currency. And that's why, as a trader, you need to also watch what is the impact of this news on the particular currency that is coming up. Now, how do you look at the impact? Basically, when it comes to the impact, we have 4 different categories. We have 4 different categories, and you will know them by their colors. The first one is like a gray color. Let me look at an example. Okay, let me see if I will see any news that has a gray color. Okay, good. Look at this. This is the first color. Look at it. You can see gray color. This is the first color. Now, when you see this, it means that it has little or no impact on the currency. It is just telling you, oh, there is a bank holiday on New Zealand dollar. So basically, you can see that this news is just an information telling us what? That there is a bank holiday on New Zealand dollar. And so when this day comes and you realize that the currency is not really moving, it's not really moving as expected, it's just giving us an information that it is because the bank is on holiday. If we are together, please let's wave our hands. If we are together, please let's wave our hands. Oh, good, good, good. So the second one, the next one, so we can see that this one, it has no impact, it's just an information. Now the second one is the one with the yellow color. If you look at it, the one with the yellow color is telling us it has a low impact. The news has a very low impact. Now, the first one says it has no economic impact at all. There is no economic impact. But the yellow tells us it has a low impact on the economy. Now, the next one is what? We have the orange. The next one is the orange. The orange. And if you look at the orange is telling you it has a medium impact. It has a medium impact on the economy, on the country, on the currency. It has a medium impact. Why we have the last one, which is the red. And we all know when you see red, you know what it means. You can see the red. So when you see red, it means it has a very high impact on the currency. So this is how you know how to take advantage of a news. So it is not all the news that you want to take advantage of, because it's, if you're looking at, let's say, for example, because you see that we're having a news and the color of the news happens to be gray like this, and you're expecting there should be an impact. It's just a waste of time. It's just an information. There won't be an impact on the chart. So that's why you need to understand which of these news has impact. Now, if we are together, please type in yes on the chat box. If we are together, please type in yes on the chat box. Now, let's go to the next one, which is the description. Oh, okay, thank you. Good, good, good. And to be sure we are all together. Now, let's go to the next one, which is the description. Now, the description is what helps you to know what the news is all about. So we can see different description. So the one for AUD is telling us it's the MI leading index. MI leading index. Now we have the JPY is telling us the news is about trade balance. Trade balance. For Euro, it's telling us it's German PPI. German PPI. Then the GPP is CPI, that is Consumer Price Index, Consumer Price Index, and that's how it is. So this is where you see the description about a particular news. Now, how do you know the news? How do you know what the news is all about? How do you know what the news is all about? Now, to know what the news is all about, then you come to details. You come to details. Now, let's assume we want to see the news on GPP. We want to know what it's all about. Just click on this envelope. Click on this envelope. That's how you will know what the news is all about. Now, when you click on this envelope, number one, you can see the source. You can see the source. The source is Office for National Statistics. The source is Office for National Statistics. The source is Office for National Statistics. Then you can see the second one. It talks about what it measures. What does it take into consideration? What does it measure? Now we can see that it measures the change in the price of goods and services purchased by consumer. It measures the change in the price of goods and services purchased by consumer. Now, I want to ask us a question. Let's take, for example, we all know this is what is happening in Nigeria. Let's say you decide to go to the market today. Let's assume that Mr. Happiness decides to go to the market. And let's say he bought, okay, what can we use? For example, let's say he bought a bag of rice. And as a last month, he went to the market to buy a bag of rice and he bought it for, let's say, 12,000 naira. And this month, you went to the market, you saw that same bag of rice for 15,000 naira. Now, what has happened? Who can tell me what has happened? What has happened based on that scenario? Last month, you went to the market, increase in price. Thank you, Mr. Akin. So it's obvious that what there is a continuous increase in price. Exactly, inflation, increase in price. Thank you. So it means we are experiencing an increase in price, and that's why they said this news, it measures the change in the prices of goods and services purchased by consumer, that is Mr. Happiness. That is what it measures. Now, let's go to the next thing. What is the effect of this news? What is the effect? Now, they said if the actual is greater than forecast, then it is good for currency. If the actual is greater than forecast, then they say what? It is good for the currency. Now we'll go there. Let's look at the frequency of the news. Now we've been told that this news is released monthly. About 16 days after the month ends. 16 days after the month ends. Now let's look at this next point, which is important. Why traders care? Why do we as a trader, why do we care about this information? Why do you care? Why traders care? Now, why we care is this. Consumer prices account for a majority of overall inflation, which is what Mr. Kelvin has said. When there's an increase, it's calling attention to inflation, which is what Mr. Kelvin has said. So now we can see that what they said, consumers' prices account for a majority of overall inflation. So when the consumer begins to account for an increase in price, it's telling us what there is inflation in the country. Now, inflation is important to currency valuation. Inflation, please let's take note of all this. Inflation is important to currency valuation because rising prices lead the central bank to raise interest rates. Now, who can answer this question? Now, we've been told that when there is an increase in prices, because they said rising prices, when there's increase in prices, it will lead the central bank to raise interest rates. Who can tell me, why are they increasing interest rates when there is increase in price? Who can tell me, why is the central bank thinking that it needs to increase interest rates? Why? Why? Who can tell me? Who can tell me? What has interest rates got to do with the increase in prices of goods and services? Who can tell me? What has interest rates got to do with the increase of goods and services? Anyone? Anyone? We are back to economics class. Anyone? Anyone? to balance market trend. Okay, yes, I like that, to balance market trend, but I prefer you explain, you expatiate on that. Give us in detail, break it down for people. Thank you, Mr. Techno. That is the word. Thank you, Mr. Solo. Thank you very much. That is the word. For people to save more. Exactly. Now, what it means is this. We all know that the reason why prices are increasing is because the manufacturers are saying that people are coming to buy. And when they buy, they notice that buying pressure is not equal to selling pressure. So they tend to increase the price. When demand for a particular commodity continues to increase, what will happen? They will increase the price. Now, why the central bank believes that the next thing they should do is to increase interest rate is because they want to discourage spending. They want people to reduce the way they spend and encourage savings. That is it. Because why are they encouraging saving? Because you know that when you save, you will get an higher interest rate. It's just like me deciding, oh, I have a car I've been hiring, and probably I noticed that, oh, because of the increase in price, it has led to an increase in the price of the car. Now, even if I would love to buy the car, well, I could sit down and think of it. It's not that I don't have a car I'm driving. Why don't I take this money, save this money, and get more interest rate? And after which, when the price normalizes, I can go back and buy the same car at a lower price, and I've gotten more money from the interest rate, from the money I've saved, which is the interest rate. So as a person, instead of going to go and buy the luxury, which is car, I could decide to save. That is why they increase interest rate. And remember, how does increase in interest rate now affect the buying and selling pressure? Remember, the reason why price is increasing is because demand for that commodity is increasing. So when they notice, when the manufacturers also notice that what the demand of their commodity begins to reduce, what will happen? They will also begin to reduce the price so that they can encourage people to come and buy. Then before you know it, unconsciously, everything will normalize. Everything will normalize. So this is the mind behind all this decision. Please, if you understand this, I want you to type in a yes on the chat box. If you understand this, please type in a yes on the chat box. Oh, good. So basically, we now understand what this news is all about and why it is important. Now, let's now go back. Where it's key as a trader, where we now need to put an eye on is how to take advantage of this, which is this usual effect. Now, on this particular news, they've told us that when the actual is greater than the forecast, then it is good for the currency. Now, when they say something is good for the currency, will it allow the price of that currency to go up, or it will allow the price to come down? Who can answer that question? When they say something is good for the currency, will the price go up? Will the price of that currency go up or come down? When they say something is good for the currency, will it go up or come down? Thank you, Mr. Solo. It will go up. Good. It will go up. It will go up. Good. Now, let's now look at it. So we've been told, let's now look at how to take advantage of this. Now, let's come to how to trade it. So we can see from this point, we can see the actual and the forecast. This is the actual and the forecast. And we can see this is the particular news. So we can see that the forecast was 3.2%. The forecast was 3.2%. Then when the actual came back, it was 3.1%. Now, who can tell me, is the actual greater than the forecast? Is the actual greater than the forecast, or the actual is lesser than the forecast? Who can tell me? Is the actual greater than the forecast, or the actual is lesser? Thank you, Mr. Happiness. It's lesser. Exactly, it's lesser. Now, because it is lesser, now will it cause the news is on GPP. Will it cause GPP to go up, or it will cause GPP to come down? Based on the description, we can see that the actual is lesser than the forecast. So will it allow the price of GPP to go up, or it will allow Thank you, bearish. Thank you. Calm down. Exactly, bearish. So this is how you trade it. Now, how do you now trade it? Let's now look at how to make money from this. All you need to do is now look for the currency pair. When you look at the currency pair, in as much as GBP is the base currency, in as much as GBP is the base currency, then what will you do? You will sell. You will sell in as much as GBP is the base currency. But in a scenario whereby GBP is the quote currency, you will buy. This is how you make money out of the news. This is how you make money out of the news based on this news. Are we together? Are we together? Now, please, do we understand all these things? Do we understand all these things? Please, I want to be sure. Do you understand how to make money, how to trade the fundamentals? Do you understand how to trade the fundamentals? Yes or no? Please drop it on the chat. Yes or no? Yes or no? Okay, Madam Happiness is saying no. Oh, Madam Happiness, I will use, let me do another example. Let me do the last example before, because our time is fast spent. Okay, let me do the last example. Okay, I'm going to use this news that happened 3:30 just now. Let me use this news as the last example. Please, Madam Happiness, listen attentively. For those that are saying no, please listen now. This is the last example. I won't do another. Okay, let's look at it. Now we can see that this news is on US dollar. You can see that this news is going to affect US dollar. And what is the news about? The news is talking about crude oil inventory. Crude oil inventory. Crude oil inventory. Now, let's click on it. Let's read about the news. Let's read about the news. Now, what is crude oil inventory about? What is it about? Now, if we look at this, we can see that it measures the change in the number of barrels of crude oil held in inventory by commercial firms during the past week. It measures the change in the number of barrels of crude oil held in inventory by commercial firms during the past week. Now, who can tell me? If you look at it, they are talking about crude oil that have been produced but are yet to be sold. So they have them in stock. Now, who can tell me, when crude oil is being produced but they don't have buyers for it, is it good for the economy or bad for the economy? Crude oil has been produced, but they don't have buyers for it. Is it good for the economy or bad for the economy? Who can tell me? Thank you. Thank you. It is bad for the economy. Thank you. Now, let's go. Let's look at the effect. They say when the actual is less than the forecast, then it is good for the economy. Now, remember, we said that when they produce crude oil, the best way that the economy will be happy is as they are producing, let buyers come and get it away. Now, from this, we could see that if the actual is lesser than the forecast, that is, when we say actual, it means that when the result comes out, if the number of crude oil in inventory is lower, then that is when the economy is happy. That is when it is good for the economy. So that's why they say when the actual is lesser than the forecast, then it's good for the economy. And we can see that this news is always released every week, 4 days after the weekend, every week. Now let's look at the news. From this news, we can see that this is the forecast. Let's look at. So we can see this is the forecast and this is the actual. Now, when the forecast came, forecasts are basically people's votes, people's opinion before a news is being released. So people will have been voting, thinking this is what will happen before the news is released. So we will see that people are thinking before now that when this news is released, so 2.1 million barrels of crude oil will be in inventory. That was the opinion, what people are thinking, that 2.1 million barrels of crude oil will be in stock, looking for buyers to come and buy it. But when the results came out, we could see that they even have a negative. That is, they have sold out all the old crude oil in inventory, and some people have paid money, but they've not even gotten it, and that's why we have negative. So we have negative, meaning that they have people that have paid money and say, I want crude oil, but they are yet to produce it. That's why it's a negative. So we could see that we are in a negative of 0.4 million barrels of crude oil waiting to be produced. Now, who can tell me, is this good for the economy or it is bad for the economy? Who can answer that question? Is this good for the economy or it is bad for the economy? Is it good for the economy or it is bad for the economy? Thank you, Mr. Isaac. Thank you, Mr. It is very good for the economy. So now, to trade this, how do you trade this? To trade this, remember, this news is on US dollar. The impact of the news is affecting US dollar. So in as much as US dollar is the base currency, that is the currency that comes first. US dollar is the base currency, that is the currency pair that comes first. And it cannot be any other currency. That's why I'm using XSS. It can be USD JPY, it can be USD CAD, it can be USD GBP, any other currency. But in as much as USD is the first currency, what will happen? Who can tell me what will happen? Will it buy or sell? Will it buy or sell? If USD is the base currency, will it buy or sell? Buy. Thank you. Thank you. So in as much as US dollar is the base currency, then it will buy. So also, when we now have any other currency and US dollar is now the quote currency, that is US dollar is the second currency and any other currency is the first currency, then it's going to sell. It's going to sell. So this is how you trade fundamentals. Please, is this clearer now? Do you all understand? Mr. Happiness, do you understand it now? Is it clear now? Mr. Happiness, is it clear? And for those that said they are not yet clear, is this clear now? Yes, I do. Thanks for explaining further. Thank you, Mr. Happiness. Thank you very much. So I hope you understand. So basically, as a trader, you should always, now I've gotten to the level in which I told myself, I will never enter a trade without checking the news. It's important. Because if you don't check the news and you're just trading, it means you're trading blindly. Because one thing I realize is, even if you have analyzed the market technically and you do not trade the news and you do not look at the news, when the news release comes out, it will cancel all technical analysis. The news is as important as that. And that's why we say it is the forces that moves the market. So before you even enter a trade, as a trader, you must always look at the news and what you are expected. And one thing I also want you to know is this: when a news release is yet to come out, you will see the forecast, but the actual will not be there. You will see the forecast. You can see all this one. The forecast is there, but you will not see the actual. Why? Because the time of the news has not yet come. So the actual will only be here when the news release is out. So that's it. So all you need to do is take note of the time of the news. And when you see the time, when it is the time, come and refresh it and you will see the result. And that is when you can now begin to trade it. And lastly, before I go, I would just like to tell us that please, there is also a news that is very important, especially on US dollar. And we call this the non-farm payroll. This news is very, very important because the volatility it gives to US dollar is key. We call it the non-farm payroll. So as a trader, you need to be careful. And this news is always released once a month, which is every first Friday of the month. Every first Friday of the month, every month. Now, when you're trading this news, when you are trading, you need to be very watchful about this news. It is known as the non-farm payroll, and this news is always released every first Friday of the month. So please, when trading as a trader, please be watchful of this news. This news is always 1:30. 1:30 p.m. in the afternoon, and the news is always affecting the US dollar. The US dollar. So please always watch out for the news. Any question? Any question?